Hello and welcome to our daily market update. That's Ahura will be with you with the short market update as of today, which is, let me find my chart here we go. March 8, as mentioned, the March 18, the day 19 of Iran war. Uh, the war, which sounds like we are getting closer to the end of that, as already yesterday Israeli mentioned that they killed the second person in charge practically uh, after Ali Khamenei, the previous supreme leader, did. Sounds like it. And everyone they were talking about that Ali Larijani was the person who was in charge and leading somehow the regime. Yesterday, Israelis they could kill him, in line with the many other top leaders, top army leaders actually, that more than 100 of them yesterday they have been killed. That was somehow the process, a positive process in a war, and even the market had a positive reaction to that. Sounds like now this Islamic regime is more vulnerable right now, and they will be able to be more control, and they can control the war, and probably we are getting closer to the war. And that was on the geopolitical tensions. Well, yesterday. Uh, Mr. Trump once again in White House talked about the NATO, about the UK, especially in France. The UK also he mentioned about the Japanese as well. He was not so happy about what the NATO had in reaction. Don't forget that a few months ago, when we had him, just like Munich is like 2 months ago, less than 2 months ago, we had a Munich secret meet as like annual Munich secret meeting. What's what I forget the exact name of that. That we had in Munich. He mentioned there that while as any time that the NATO need us, we are helping them. But I don't think that if we need help, NATO will be there. That's what he mentioned just like less than 2 months ago. And now we can see that in practice, that when US asking them that you can come and take a part in the Persian Gulf and the Strait of Hormuz. None of them so far had positive reactions. Well, they are all positive. They are all against. They are none of them are against this war, and they say that yeah, US is doing a good job to control the Islamic regime in Iran, but we are not going. We are not taking a part in this war, and it's not our war. That's somehow disappointed the President Trump. We should wait for the war end, and then most probably what we know from the Mr. Trump, he gonna react something to this, and he's not going to let that go just like if nothing happens like that. Anyhow, that was on the geopolitical tensions. He mentioned that the meeting with the China most probably will be postponed, but it's not going to cancel. Their relation with the China is different. He's happy now with the relation, that economic relation that they have with the China. And about the Cuba also, he mentioned that Mr. Trump mentioned that it's going to be Cuba's turn after Iran war. They have to wait for that. But we know that already the Cuba they started some talks with the United States. The Marco Rubio is following that. Let's wait and see. Let's wait and see. Okay, let's go into the after geopolitical tensions, which has mentioned they had a positive reaction in the market with along with the economic data. When I'm talking about the positive reaction in the market, we can say that yesterday we saw that the U.S. market closed higher. Dow Jones more than 1%, sorry, 0.1%. S&P 500 0.2%, Nasdaq almost 0.5%. They all of them they closed higher, while the market risk lowered to 22.37 after we saw these numbers around 30 just a few days ago. That supported the gold price to slightly increase about $5,010, while the oil for both WTI and crude oil they lost more than 3%. Now we can see the oil price around $92. With the lower risk in the market, this positive reaction in the stock market continued, with the futures so far increasing by 0.5% for Dow Jones and the Nasdaq, or Dow Jones and S&P 500, while the Nasdaq increasing by more than 0.6%. And as mentioned, the gold is positive and oil is falling sharply. With the higher with the lower, sorry, with the lower risk in the market, we could see the risk premium is slowing down. That's why you can see the yields for the 10 years bonds in most economies, and almost in all the main economies, is falling down. Now the US 10 years bond yields slowing down towards 4.178, 4.17, while it was 4.25 just a few days ago. So like 5 days ago. That's 4 days ago. Yeah, that's what happened and what's happening in the geopolitical tensions and the market reaction, not to just to the geopolitical tensions, to the economic data as well. We know that the Asian market also so far today, they continued the positive movement of US stock market and futures market, especially in line with the lower oil prices, and also the positive movements that we had in AI and tech companies, especially in Korea. We know that the Kospi increased very well. Nikkei in Japan also increased by more than 2.6%, while Hang Seng increasing, Shanghai somehow just a flat, but other Asian economies like Singapore, India, all of them, they are increasing by at least 1% today. That's what's happened geopolitically and the general overall economic on the economic movements and market reaction. And looking at the economic data, yesterday and after our update, we had the inflation producer price index, or PPI, producer inflation. In Switzerland, we saw that the falling by 0.3% monthly and 2.7% annually. Once again, while we know that the inflation in Italy also increased only 0.5% with 1.5% annual growth, that once again showing that the main problem in the Eurozone is the lower demand and the lack of demand by the consumer. And if the inflation is low, it's not because that the European Central Bank is doing a good job. It's because that the consumer, they are not willing to pay. They are not willing to spend their money. That's why you can see the inflation's lower. And so far, you could see that in ZEW economic sentiment as well, with the ZEW economic sentiment for the Eurozone falling to minus 8.5 from previous 39, while in Germany, ZEW economic sentiment fell to 0.5%, 0.5 from previous 58.3. The current sentiment in Germany also slightly got better from minus 65 to minus 62.9 or minus 63, but still minus 63. That shows that how good economy is. I mean, you know the meaning of the good here. Economies in Germany. Uh, Yesterday we had a trade data from Israel. It's interesting to know with the war going on, the trade data and trade balance is still not so bad in Israel, and they are moving fine. The economy sounds like still in a stable situation. In United States, we had Redbook data. Redbook retail sales increased by 6.4% previous week, showing that this like Canada, this like European economies, this like Asian economies, consumers spending is still positive in United States, with the Red Book at 6.4%, which sounds like a very good numbers, very good number for now. Pending home sale increased by 1.8%, and pending home sale index also from 70.8 increased to 72.1. Generally shows that the housing market also is a positive. Yesterday, one of the shocking numbers was about the API weekly report, which showed U.S. energy had, especially in the private sector, they had sharp increase in inventories with 6,600,000 barrels previous week, while the market was expecting to see the more than 600,000 bottle drop, but increasing in inventories was somehow shocking the market, and in line with the lower risk in lower geopolitical risk, supported the oil price to fall further. Today, later, we're gonna have the EIA weekly report as well. Following this increasing in inventories in API reports, we'll probably can see the increasing in inventories for in EIA reports in previous week as well. So far today, we had the economic kind of like we can say current accounts balance for the fourth quarter in New Zealand for the fourth quarter 2025. Still not positive, not that much good. It's like GDP, just like current account per GDP is increasing by 3.7%, falling by 3.7%. I don't think that's a good number for the New Zealand. They most probably they can hold the current rate of 2.25 if I don't mistake, and they will not see any policy change. They're going to be supportive so far. In Japan, we had the Reuters Target Index increasing to 18 from previous 13, while trade balance was amazingly in jumped and got better, with the export increasing by 4.2% and imports increasing by 10.2%. Generally, the Japanese economy is doing fine with these numbers that we had for the February. That can somehow support and help the Mr. Ueda against the governments, against the Takaichi government, to increase the rates. Most probably tomorrow that we will have the Japanese tomorrow, the day after, that we will have the Japanese Central Bank meeting. We will not be able to see any rate hike, but in April, that's possible to see 25 basis point rate hike, and we can see the Japanese interest rate at 1% after very long time. Yesterday, there is some data about the news about the Australia MI leading index in Australia fell by 0.1%. That's the reason that despite overall market expectation of the whole rate hike, I told that the best choice for the Australian economy is to hold the current rate at 3.85%. That was one of those reasons. We know that the Australian economy is weakening by the GDP. We know that the Australian unemployment rate is falling sharply. We know that the PMI numbers are weaker compared with the other economies, and we know that the inflation is somehow it's not so low, but it's not so much high as well. But it's the high we can say. We know that unemployment rate again increasing. So in this condition, as a central bank, if you hike the rate, you are sending your economy towards a stagflation, because there is no economic growth and there is inflation, higher inflation. And if you just like you do that, it means that the world inflation is high and it's not going to lower right now, because it's not depend too much on the Australian economy. It's because of the geopolitical tensions that increase the inflation, that increase the energy price higher, and whatever the policy you want to take in your country, the if energy price is higher, that is with that will end with the stagflation. You don't do that in this condition. You go towards the more accommodative policies. You're gonna hold the rates or cut the rates in this situation to support the economy. It's not a good decision that yesterday we saw in Australian Central Bank, in Reserve Bank of Australia. But anyhow, this is what they decided to hike the rates from 2.85% to 4.1%. Hopefully, we are not going to see such a stupid surprise in Canada and the United States and Brazil tomorrow, early morning, or today, later today. Hope it's not going to happen in there, which is I don't think so. In Canada, today we're going to have the central bank meeting while Canada, we know that the Canadian economy is not doing so fine. I mean, it's not so good, the Canadian economy, the central bank that Reserve Bank of Australia yesterday we had. Canada and United States is the banks that we're going to have today. The Canadian economy is not doing so fine. We know that the economy is under pressure. We know that it's softening, especially with the domestic softer GDP growth we have there, while the inflation is somehow slower, but still there is a risk of higher inflation because of ongoing geopolitical tensions and oil prices. That's why I don't think that the Canadian economy, the Canadian policymaker is going to make any risk to hike the rates. That's why that this is all the reason that I think that the Canadian economy, BOC, will hold the current rate. Same in United States. Actually, in United States, there is more than 99% chance for holding the current rate. So for USA, the question is not about the question is not about the will the if Federal Reserve hold the rates or not. They're gonna hold the rates. The question is that about the mostly about the about the dot plots and the sentiment. We can say the tone of the statements, what how the statement will be. Will that sounds more dovish or hawkish? What it gonna be? And also about the dot plot, what policymakers thinks about the future policies and about the future economic growth and their expectations of the economic growth. That will be much more important compared with the current, just like compare with the just like rate, just any change in the interest rates, because as mentioned, the market is already counting by more than 99% of holding the current rate. So the question is about the dot plus. I'm pretty sure that we're gonna have again holding the current rate. With what the decision gonna be? The decision will be mostly holding the rates with the data-driven expectations and data-driven expectation and slightly hawkish. That can be somehow the positive and supportive for US dollar index, but it's not going to put too much pressure on the stock markets, which is not a positive and supporting as well for them. That's what we are expecting to see in the central bank's meetings. However, we are not going to see just only the central bank's meetings here today. Tomorrow, the the BCB, the Bank of Brazil, bank also will have the interest rate meeting, and we are expecting tomorrow early morning by the Europe time, but in United States by the US season, it's going to be today. Later, I have to mention that we are expecting to see that the BCB also holding their rates at 15%. There is no, just I don't think that they're gonna do this, such a risk to cut the rates. For now, because inflation is lowering, but it's not so much. They probably, I mean, the Brazilian central bank, it was one of the bank that they was expected to cut the rates, to be honest. But for now, it's going to be risky because of the current condition, because the inflation is a very, if the rates were lower, I would support the hold the rates, but I don't support the lower the rates. I mean, for the Brazilian economy, it was better if they cut the rates in a previous meeting and we could see the inflation rates at around 14% so far for this meeting. But as we are right now in the current situation, cutting the rate is not going to be a good option. This is the same thing that the central bank in Turkey also did. They hold the rate at 37%. Don't forget 37%. Anyhow, today later we're gonna have the inflation data from Eurozone, the final numbers for the February, and we are I think that we can see the flash data will be repeated at 1.9%. Previously, they increased the expectation from 1.7% to 1.9% in the flash data. I do most probably in the final numbers also we're going to see the same numbers. Mortgage rates today for 30 years in United States, 30 years mortgage rates. I don't think that we're going to see any big changes around 6.98, a little bit lower or higher around these numbers will be. And most probably we will see more expected again another increase. Now it's 3 weeks, if I don't mistaken, that we have mortgage application increasing, and most probably we can see again another increase in applications as the rates are somehow to pause, somehow to affordable to get them. Another important numbers today is U.S. Producer Price Index PPI numbers, but as mentioned, because of the central bank's meetings, market will not pay too much attention on the PPI. Anyhow, we're expected to see the PPI slightly higher. We will have the PPI today. We will have the durable goods orders and all these numbers. However, the market will focus on the central bank's meeting in the United States. In Russia also, we will have the Producer Price Index PPI, which is expected to fall again by 2 point. 5% just like repeating the same lower prices in the for producers as we had previous months. That was what happened in the markets, market reaction, geopolitical, economic, and our expectation. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye bye.